The AI models are screaming buy signals for XRP like I haven't seen in months. Let's break it down. All right, my lovely viewers, here's where we are right now with XRP. We're sitting pretty at $1.34, up a nice 2.16% in the last 24 hours. Now, you know what I've noticed? The trading volume is actually holding steady at over 121 million XRP on Binance, which tells me people are still very much interested in this coin. And here's something that caught my eye. XRP ETFs are showing net inflows of $26.7 million. That's institutional money flowing in, sweethearts. So let me tell you about the charts, because this is where it gets interesting. The RSI is sitting at 42, which is in that sweet spot where it's not overbought but has room to run up. Here's the thing though. We're trading below most of our moving averages, and we're sitting about 19% below that important 200-day moving average. Now, normally that sounds scary, but in my experience, that kind of deviation often means we're due for a bounce back up. Well, the broader market is doing something curious right now. The S&P 500 just posted its 9th straight weekly gain, but crypto? It's been drifting lower. Oil is hanging around $92 on some ceasefire hopes. And here's what's fascinating. XRP actually tends to move opposite to the dollar, with a negative correlation of about -0.47. So if the dollar weakens, XRP could get a nice little boost. Now, this is interesting. There's buzz about Ripple potentially getting approval for a Federal Reserve master account. If this passes, here's what happens. It could absolutely trigger a new bull run for XRP. Plus, they're expanding into DeFi with new AMM swap fees, which is honestly pretty exciting for the ecosystem. The regulatory winds seem to be shifting in XRP's favor, my dears. The mood right now is, well, let's just say it's pretty gloomy. The Fear and Greed Index is at 23, which screams extreme fear. But you know what I've learned over the years? When everyone's scared, that's often when the best opportunities show up. XRP search trends are low at 28, so we're definitely not in FOMO territory yet. The big players are doing something interesting. Out of over 11,000 transactions, 128 of them were whale transactions. That's a lot of big money moving around. When I see whales this active, it usually means they know something we don't, or they're positioning for what's coming next. In plain English, we're at what looks like an accumulation stage according to Wyckoff analysis. Think of it like this. It's phase A, where the smart money quietly builds positions before the next big move up. The Elliott Wave suggests we're in a correction phase that's getting ready to turn around. So what does the AI think? Well, this is where it gets really exciting. The short-term prediction for 1 day out is $1.63. That's a 22% jump with a 98% probability of going up. 7 days out, $1.59, still an 18% gain. But here's the kicker. The 30-day prediction shows $2.32. That's a whopping 73% increase with 99.7% confidence. Now, I'm not an expert, just someone looking at AI data, but those numbers are pretty compelling. But here's what could go wrong. The crypto market could stay decoupled from the strong stock market, and if Bitcoin decides to take another leg down, it could drag XRP with it. Also, those whale transactions we talked about, they could turn into selling pressure if they decide to take profits. Here's my take, based on what the data is telling us. This looks like a gradual accumulation opportunity. I'd consider entry around $1.32 to $1.35, which is right where we are now. If it dips, maybe add more around $1.28 to $1.30. For risk management, I'd set a stop loss at $1.25. First target? That $1.59 to $1.63 range the AI is suggesting. Second target? Well, if the AI is right, we could see $2.30 to $2.35. The data is pointing up, the whales are accumulating, and the regulatory environment is improving. That's it for today, my wonderful viewers. If this analysis helped you understand what's happening with XRP, please hit that like button and subscribe for more market insights. Remember, always do your own research and never invest more than you can afford to lose. See you next time.